Hello, I am Professor Feroz Khan. I'm a professor in Fortune Institute of International Business, New Delhi. So I teach the company law and also the finance subjects. My forte is into I have done my company secretary, I have CS and also ICAA. And yes, I have also have a lot of practical experience from the industry. Now today I will tell you and I will introduce you this dividend and accounts under the Companies Act 2013. So this dividend and accounts are very interesting, very much interlinked also. As you know, the dividend depends on the amount of dividend what the company is going to pay to their shareholder. Okay, it depends on the profit, what is reflected in the accounts. So accounts means here the financial statement, the profit and loss account. As we have the right name has come out now, the latest, as per the Companies Act 2013, this is called statement of profit and loss and the balance sheet and also cash flow statement. So dividend depends on the profit amount, as we know, and similarly dividend depends on a lot of other factors also. While the company is interested to pay dividend, company is not so free to give any rate of dividend or any amount of dividend to the shareholders. It depends on what the company has earned the profit. That is of course the number one factor to be taken into consideration, but the other factors like what the industries, what the peers are paying, similarly the fund position, similarly whether there is a crisis or whether there is the economy is on the right shape, and so many factors depends on the decision making of the company while paying the dividend to the shareholders. Now let me take you to the basic premise while talking about also the Companies Act 2013. And as you know, there are a lot of changes happened in 2013 as compared to the earlier act, Companies Act 1956. Okay, so this time when you look at the Companies Act 2013, chapter 8, okay, and chapter 9 of the Companies Act 2013, that covers from section 123 to 138. So that covers all the dividend and accounts which are under the Companies Act. Now as I said, dividend it's very crucial decisions. Just stakeholders and a lot of shareholders, they look forward to get a higher rate of dividend. But now everything depends on the profitability, everything depends on so many other factors, as I said, like what the others are paying, whether the company's fund position is okay or not, whether the company has got a future plan or not. So if the company has got a future plan, perhaps the company is not going to pay good rate of dividend, even if the company has got a lot of profit this time. So there are n number of things going to affect, but let us understand as to how the dividend decision being regulated, because as you know, if you get into the regulation part, once the company declares a dividend, it becomes an obligation. And supposing the company declares and do not pay the dividend, in that case, the directors are also responsible in that case. So that's why it's a very crucial decisions. There are a lot of shareholders, there are a lot of investors, they're looking forward, they're waiting for the rate of dividend to be declared by the shareholder board of directors. At the same time, company has to also look inside as to whether there is sufficient profit or not. So this is briefly just to introduce dividend. Now let me introduce also accounts. Accounts are the crucial thing, the basic thing, you can say the basic premise. If there is a profit in a company, if the statement of profit and loss account talks about a huge profit, maybe you can see next the company is going to pay huge dividend. Okay. Similarly, there is a balance sheet. Similarly, there is a cash flow statement, which we generally call the financial statement. Okay. Now, very interesting thing. I mean, when you look at the preparation of the financial statement, the board of directors, they have got a responsibility to prepare this, okay, and after they prepare, they generally refer the entire financial statement to be, they approve the financial statement, but before that, they hand over the financial statement to be overlooked by, to be seen by the audit committee. The audit committee, it's basically a committee of the directors, and as you know, there are a lot of SEBI guidelines nowadays that most of the directors should be the independent directors, should be the non-executive directors, etc., etc. Now, after the audit committee looks, goes through that financial statement, now audit committee has to approve it, okay. Then after that, the board of directors, they have to approve it, and next it is to be handed over to the auditors, okay. So after the auditor, they have seen that, they have given their report, and further they have sought the clarifications from the board of directors. Now the accounts have to be given to the shareholders for their adoption, for their approval, and also adoption in the AGM. So this, with this premise, let us understand that accounts, as we see in the newspaper, there are lots of, sometimes window dressing, lot of manipulations, lot of complaints against the way the accounting is done. But believe me, it has got a basic premise to understand, why a company would like to inflate the profit or decrease the profit. Maybe there is some intention behind, but whatever it is, the rule says that the Companies Act to be followed, the accounting standard which is given by the ICI, Institute of Chartered Accountants of India, and further we have got a body now, National Financial Reporting Authority. Okay, this is as per the Companies Act 2013. So lot of connections with the the statutory bodies, and the accounting standards to be followed, the guidelines given by central government, National Financial Reporting Authority and Companies Act, etc., all have to be followed when we say the accounts are good, or accounts are going to reflect true and fair view of the financial results of the company. Okay, so let me take you formally what are the rules and regulations. Okay, and next I will take you to linking the practical side with the regulations. Now again, before I get all of you into the nitty-gritty, let me tell you exactly what is the learning outcome. So if you look at this, if you listen to this video, then what exactly is the the learning. So this particular module which talks about the regulations of accounts, dividend and accounts, simultaneously looking from the regulation perspective, so also trying to develop a system. So when the company wants to have a very good accounting and financial system, the company has to frame it. Okay, so while the rules and regulations are the guiding force, but again the company, the board of directors, they have to devise a system, devise a process, what can be called the accounting and financial system. So one learning outcome is this module is going to give you a kind of understanding and developing an appropriate system for the dividend, so also the accounting and financial system. Now after you have identified the proper process, now we have to also evaluate whether this system is appropriate or not. So these rules and regulations, what we are now going to discuss next, these rules and regulations are going to even evaluate the kind of existing system what we have with regard to accounting and financial system and dividend, whether these systems are appropriate or not. Similarly, another learning outcome can be, okay, there was an old act, that is Companies Act 1956, and there is the new act now, that is Companies Act 2013. So how come there is a lot of differences, and how come the new act has come into the picture, taking into account lots of new perspectives, new dimensions which are incorporated in the new act. So another learning outcome is understanding the difference between the Companies Act 1956 and also the Companies Act 2013 with regard to this the dividend and accounts. Okay, now quickly let me tell you section wise. Section 123 to 127 deals with dividend and matters connected to there, and from section 128 to section 138 deals with accounts. Okay, now quickly if I tell you the sections which are applicable to the dividend. So section 123, okay, that applies to the declaration of dividend. Similarly, section 124, it applies to the provisions connected to unpaid dividend account. Similarly, section 125, so that relates to investors education and protection fund. Similarly, section 126, that relates to rights to dividends, rights shares and bonus shares. Similarly, 127, that relates to punishment for failure to distribute dividend. Now quickly let us understand what these sections are relating to dividend. So as I said, 123 relates to declaration of dividend. So even I have already said that dividend is a very crucial role to play. Dividend, there are lakhs of the investors, thousands of investors, lakhs of investors, they are waiting for the declaration of the dividend rate, okay, by the board of directors. There were some instances and also a lot of articles and a lot of movies also made when Dhirubhai Ambani was supposed to declare dividend, and people have, there are some instances that Mr. Dhirubhai Ambani was asking the shareholders, let me know what is the rate, how much you want, So the shareholders, they were so instrumental in saying we want this much of rate or that much of rate, and Dhirubhai was so good, so he was declaring okay, granted or something like that. But if you look at the regulation side, the rule says that shareholders cannot force the directors to declare a dividend. Okay, that example of Mr. Dhirubhai Ambani, what I've given you, so that was from a different perspective, and definitely Mr. Dhirubhai Ambani, when he was declaring the rates of dividend which is already requested by the shareholders, he must have definitely taken into consideration the fund availability and the peers what they pay and etc. etc. So here also, if you look at the section 123, okay, that also looks into I mean when company is going to declare dividend, so that has to be paid. Okay, so and if the company declares and do not pay, then there is a serious it's a serious offense by the company. So once the company declares or board of directors declares the dividend, so that becomes a statutory obligations for the company to comply. So that's why the declaration of dividend is very crucial.